Did you know that if you missed just the 10 best days in the stock market in 2024, your portfolio only gained 4% instead of 24%? Just missing those 10 best days. And guess what, folks? Today was a terrible day out there. But the best days usually come as a result of the worst days. So stay invested. Right now, the markets are going down. The S&P was down 2.5% today. The NASDAQ was down 4% today. The Dow was down 2%. But over the last year, gold is up about 50%. Oil prices have dropped 20% over the last couple of months. And crypto, wow, the last 2 months has been a bloodbath. Oh, we've got all of these financial storms circling, folks. And in Florida, when there's a storm off the coast, if you don't board up, then you spend years in cleanup, and the same thing can happen to your money. Experts now predict that we will have 3 rate cuts this year, and that is only going to happen if we enter into recession, folks. And so here's the big question. If that happens, what do you do? Do you panic? I hope not. If you planned your retirement so that you have income every month, then you can withstand the ups and downs in the market and you'll be okay. See, I've seen this over and over, folks. I met so many people after the bloodbath of '08, and they told me they would hold on and hold on and hold on. And then finally, when they couldn't stand it anymore, they would get out. But then they would miss the climb back up. And see, these things are happening faster and faster in today's world than they did even back in '08. So if you try to get your money out, then you're going to wake up that next morning and that will be the climb out of the hole. Only you will have missed it, because it's really the insiders who get that after hours trading, and they get that big push that those big days bring us. So you have to stay invested. Let me explain a simple idea to you. TR equals G plus I. Now, what does that mean? We think of that as your total return reveals your growth plus income. You need both. And when the markets get rocky, it's that steady income that makes all the difference. Think about it. If you have enough income coming in every month, you don't have to cash out shares just as they've gone down. That steady income part becomes super important. If you have enough income every month to pay your bills, you're not as worried about what the markets are doing. The good news is we have the tools to help you. First, click below and download our recession guide. See, we don't have to go into recession for it to be helpful to you. What it allows you to do is take a self-guiding approach to how much income do you need every month. And then we've got a second button that you can push down below where you can go to our Annuities Genius portal and you can figure out how to get yourself a personalized pension. What is that? That is where you can make sure you've got the income for the rest of your life and the rest of your spouse's life to make sure that your bills are paid every single month. And then you can stay invested with confidence. Because really, with your investment portfolio, you'll be taking off interest just to pay for cost of living adjustments, just to battle inflation a little bit. And you'll still get the growth you need on your overall picture so that you can continue to grow your net worth. This is Charles Cannon, Certified Financial Planner. Remember, outplan your retirement so you don't outlive your money. Have a great day now.